Hello and welcome to Finextra. I'm Hannah Wallace, and today I'm joined by Saunders Calvert from Thomson Reuters, and we're going to be talking about M&A and capital raising in 2018. Leon, thank you for taking the time to speak with us today.
Sure, thank you.
Firstly, what's the impact of fintech in the investment banking space, and how is Thomson Reuters adapting to it?
Fintech is an interesting one. Financial technology has been around for many, many years and has already been quite disruptive, certainly innovative in the consumer banking space. You think about your mobile application, you do banking online now and things like that. In the more complicated workflows that mergers and acquisitions professionals and professionals in the capital raising space have, it's been slower to adapt to that more complicated process. There is a lot of activity associated with what fintech can do for that audience, and that's being worked through by the investment banks at the moment. It includes things like thinking about how machine learning might help them with their efficiencies around their workflow and originating new deal opportunities, that type of thing. And we're certainly in partnership with them thinking about what that might look like. But I think most practically and most tangibly, we are working with a lot of fintech companies at the moment and bringing them onto our open platform. Our open platform, most obviously manifest in terms of Icon, App Studio, allows fintech firms to effectively be brought to market by us over the Icon platform. And indeed, we then support that by it augments our own value proposition. I'll give you a few examples of some of the more interesting players in this space. And indeed, I think there's a common theme running through some of these, which is the creation of transparency around otherwise opaque markets. So the first one is Tab. Tab are a really interesting firm. They effectively aggregate crowdfunding and peer-to-peer lending information from across all the different crowdfunding platforms worldwide. And they normalize and standardize all of that data such that it can be used by regulators to better understand that emerging asset class. It can be used by academics to better research around it. And fundamentally and ultimately, it can be used by professionals to actually invest in a new asset class, in a new space. There's a firm called OddUp who are based out of Hong Kong, and they rate startups across Asia. Again, really interesting, typically or formally quite an opaque market, but if you're looking to invest or acquire into a startup in that region, then you've now got a tool which enables you to better understand that space. And finally, we have a firm called BizQualify. BizQualify are focused on the US private company market, which has typically been very opaque. It's been very disparate and fragmented in terms of the information you can get about companies in the US space. And so bringing that all together and aggregated that and then bringing that over the Icon platform, we think is really exciting, really interesting. And we're very, very pleased to work with these very innovative players in this space.
Are you seeing your clients and the investment banking market change their approach towards their technology teams and in turn their engagement with you?
I think absolutely. I think that if you speak to the heads of technology of the investment banking departments within those firms these days, they are much more in demand and indeed probably have much larger budgets than they ever previously had, primarily because of the focus from the business perspective on what technology can do for the space for the workflow. That often plays itself out in terms of the dialogue with us, in terms of thinking about how the banks might be able to commingle their data, their own proprietary data about their customers, with our data, third-party market data, and how that might sit together in the same space and create insights which would otherwise be difficult to create. What that means is there are, I think, a couple of ways in which we support that process. One is by thinking about the big data tools that we've created to allow for stitching together of otherwise disparate and fragmented content sets. And those tools, I think, are really useful and powerful about kind of creating a big data set which can then be analysed much more easily. And secondly, thinking about some of the partnerships that we're bringing to bear on this to allow for our content to sit natively within a CRM system, within a client relationship management system, and the real estate on the page carrying both your external market data and your internal proprietary data all in the same place. So I think that those are some of the critical themes that we're looking at around the digitization agenda for investment banking at the moment.
And finally, banks are under increasing cost pressures. Does this affect their relationship with you?
So you're absolutely right. Post the credit crisis that we saw over 10 years ago now, banks are still focused on, as a result of regulation and compliance burdens, still focused on reducing costs very, very significantly. And yes, they're looking at those really interesting things that technology might be able to offer, like artificial intelligence and machine learning and those types of things. But exactly how those will play out and exactly what they can and can't do, I think is still in the sort of testing and iterative process, which we certainly engage with our customers around. But actually, there's even just the basics. There's getting the basics right, which includes things like managing the total amount of market data providers that you have and seeing if there's room for consolidation around that process. And I think that we're very well positioned to support that. If I give an example, we service bankers who look to raise capital on behalf of corporations, look to help them raise money. And typically within investment banks, that's known as the ECM and DCM teams, which is equity capital markets and debt capital markets teams. And in that space, we've really effectively done a consolidation process ourselves of all of the different capabilities that we had that we think can service that space across the real-time trading, live pricing information, and all the referential data that we carry. And bringing that together, I think, has been really, really useful to service that audience. And then especially when we add the partners that we're working with in that space, that includes the likes of SIA, who've created a book building capability, a book building application, which allows the order management process of IPOs and things like that. We've worked with a company called Semantic Evolution to solve for a runs parsing problem. That's a very technical term within the industry, but certainly our DCM, our debt capital markets users are very, very familiar with it and use it extensively and require it to do their jobs. And finally, we've partnered with Symphony around the Messenger platform, combining our Messenger community along with Symphony's Messenger community and really working that through the Icon platform. So that process of consolidation is one which we're really looking to help our customers through, and getting the basics right becomes really, really important when you're looking at your total cost of ownership.
Leon, this has been great. Thank you very much.
Thank you very much.
And thank you for watching.